In the humid sprawl of Georgetown, Texas, the soundtrack of the American dream is shifting. For a century, that sound was the syncopated human thud of a hammer against a pine stud. But today, if you stand near the right development, you'll hear a low industrial hum, the sound of the ICON Vulcan II. This massive robotic gantry doesn't build in the traditional sense, it extrudes. It glides across a concrete pad, squeezing out a proprietary mix called Carbon X with the precision of a master baker icing a cake. The result is a corduroy aesthetic, ribbed, layered walls that feel like a 24-hour house for a digital speed world. It is sleek, it is strange, and it can birth a structural shell in as little as 27 hours. But as we watch this high-tech ballet, we have to ask, is this the definitive solution to our housing crisis, or are we just watching a very expensive high-tech shell game? Because while the robot is fast, the world it lives in is stubbornly, agonizingly slow. If the robot is the hero of our story, the analog purgatory that follows is the antagonist. Data from industry leaders like Anycubic and 3D Natives reveals that the print only accounts for about 40 to 50% of the home. The robot builds the walls and then it leaves. What remains is a structural husk of Carbon X, a material that, moments before setting into stone, looks and feels like thick, heavy oatmeal. Imagine a homeowner pacing through these hollow concrete rooms, restless, just waiting for the walls to go up. There is no drywall yet, no wires, no pipes. Just the sound of their footsteps echoing against the corduroy ridges. They might be sitting on a lone folding chair in that empty shell for 6 months, waiting. A robotic gantry can print a shell by Wednesday, but the house isn't a home until a human shows up to wire the lights or pull copper through a conduit. This is the systemic failure of our labor infrastructure. 21st century automation crashing headfirst into a 1950s stick-frame legacy.
You have a G-code-driven robot building the future, yet you're waiting 3 months for a plumber to install a bathtub because the human side of the equation is still catching its breath. But let's say the plumber finally arrives, the lights flicker on, and you're ready to move in. That's when you meet the new financial predator, the insurance underwriter. According to Matic 2026 Home Insurance Report, we have reached a plateau of historic unaffordability. The average premium for a new policy has hit $1,952, an 8.5% hike year over year. But the number that should truly give you pause is what we call the 9% rule. Insurance now accounts for 9% of the typical monthly mortgage payment. That is the highest share ever recorded. Insurance has evolved from a secondary cost into a second mortgage. The regional brutality of this shift is staggering. In Georgia, premiums have spiked by 28.4%. In Colorado, homeowners are staring down a specific localized increase of $666 a year. From the 23% jumps in New York to the 20.5% surge in Texas, the affordability promised by 3D printing is being vaporized. If the tech saves you 10% on construction, but insurance adds 9% to your lifetime monthly cost, the revolution is a net zero gain for the consumer. This leads us to a deeper irony, the Resiliency Paradox. Physically, a 3D printed home is a fortress. Built with Carbon X, these houses are fire-resistant and hurricane-hardened. In communities like Wolf Ranch, residents report electric bills as low as $26 during punishing Texas heat waves, thanks to the massive thermal mass of the walls. But there is a massive actuarial gap between the physical toughness of these walls and the skepticism of the people who price risk. Insurers are currently reeling from roof claims, which hit $31 billion in 2024. To an underwriter, those corduroy walls aren't disaster-proof armor, they are a liability experiment lacking 50 years of historical data. This has created a climate trap. 3D printing is most desperately needed in high-risk zones like Florida, but those are exactly the places where admitted carriers are fleeing. Homeowners are being pushed into the excess and surplus, or E&S market, a high-cost shadow market that has ballooned from 2% to 16% of the total market in just 2 years. Even the raw materials are under siege. A 25% cement tariff on imports has pushed the cost of concrete from $130 to $162 per ton. We are building the most resilient homes in history, but we are making them materially overpriced and financially uninsurable. In this new landscape, geography is destiny. If you build in a high-risk zone, the market is punishing you before you even turn the key. Maddox data shows that homes in the top 25% of risk zones have seen their value slashed by roughly $20,500. For the top 10%, that devaluation jumps to a staggering $43,900. This is the stuck homeowner, someone trapped by premiums they can't afford in a home they can't sell because it's been labeled a climate liability. While the US market struggles with these fragmented band-aids, other parts of the world are following a dirigiste or state-directed model of institutional alignment. Look at the Dubai 3D printing strategy. They aren't just printing shells, they are building an entire ecosystem based on 5 pillars. Infrastructure for R&D, a legislative structure that standardizes permitting, government funding, talent recruitment, and mandated market demand. It is a top-down alignment that ensures when the robot finishes its job, the rest of the world is ready. Back in the States, the friction is more than just financial, it's legal. We are currently witnessing a battle between the laptop and the hammer. 3D printing can reduce on-site labor by up to 70%, a miracle for a builder, but a perceived threat to the union label. This tension exploded in the legal conflict of North America's building trades unions versus Department of Defense. The core of the fight involves the Trump administration's February 2025 memoranda, which attempted to bypass President Biden's Executive Order 14063, an order requiring project labor agreements for large-scale federal builds. It's a battle over who gets to build the future. Even as the courts deliberate, the dignity of work is being redefined. Metal 3D printing is surging at a 55% growth rate, and workers are trading in masonry trowels for certified additive manufacturing credentials. We are trading the hammer for the G-code, but we must ask, are we building a new middle class, or are we just asking workers to troubleshoot a printer while the house remains unfinished? The 3D printed revolution is being built exactly as the machines intended, layer by layer. The technology has proven its worth. It can deliver a home that survives a hurricane and keeps your electric bill lower than a few cups of coffee. But the foundation of this revolution is shaky. The speed of the robot is being neutralized by the inertia of human systems. The insurers who won't sign the papers, the regulators who don't recognize the code, and the labor markets in transition. The success of your next home won't be measured by how fast the walls go up. The next time you see a 3D printed house, don't ask about the robot. Ask who is willing to insure it. Because a home is more than a shell. It is an alignment of technology, finance, and law. If those things don't line up, you don't have a revolution. You just have a very expensive concrete experiment. In life, as in construction, a strong foundation isn't just about the material you use. It's about whether the rest of the world is ready to stand on it with you.